Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to talk about 5 great companies. These companies are solid companies with proven track record of providing dividend investors of consecutive dividends. You probably have one or maybe some of these companies. But if you haven't, definitely watch this video. Check it out and do me a favor, like and subscribe, hit that notification bell so you don't miss out on any of the videos that I put out, as well as don't always remember that all of this is not financial advice. This is just me sharing. Please make sure you do your own research and make sure that the companies that I present are companies that you understand and want to invest on. With that said, definitely grab your drink, enjoy the video, and let's take a look at these companies. The first one I want to talk about is Realty Income. The ticker symbol is O. So this is one of my favorite companies in my opinion. It is a monthly dividend company. As you can see from the portfolio snapshot, 99% portfolio occupancy. They have about 1,300 different clients, 85 separated industries. You can see from the geographic diversification, you can see all the other places where they're at, even in my home state of Hawaii. As you can see, some of the clients right here are like CVS and all those other places. Let's take a look at the dividend. So looking at Simply Safe Dividend, based on the dividend safety score, they rated as an 80, which is safe. Your dividend yield at this time is about 5.48. There's a market cap, large cap. Now looking down at the key metrics, you can see a payout ratio is about 76. Your forward payout ratio is about 75. During the recession, they've increased it. Dividend streak of 54 years without a reduction. And then if you look at the dividend growth on here, you can see the last 20 years about 5%, last 5 years 3%, and then the last 4 years about 4%. 54 years without a reduction, 28 years consecutive increases, so which is good. You're going to get, if you decide this is a monthly one, so you're getting it monthly, your annual payout will be $3.07 per share. Ex-dividend date is August 31, which is 4 days away. So if you're gonna if you want to buy this, make sure you buy this before the ex-dividend date, and then your payout is September 15. It is based on Simply Safe Dividend. It might be undervalued, and then you got your price range, which is close to the low, and then you got your ratio right here, which is 13 versus the real estate is 13. Now financials, you can see right here, forward payout per share, and then you got your sales growth, outstanding sales in million, and then total sales right here, return on equity 3% the last 12 months, return on investment capital 3%. Now let's take a look at Tiprex. Based on their smart score, they rated as 6, which is neutral. Consensus is a strong buy with a 23% upside. And then if you look at the hedge funds, they have decreased their shares. Now moving along to the next one, which is Microsoft. Ticker symbol is MSFT. This is a technological company known for software products. One of my favorite companies in my opinion. I am a big Microsoft fan. I usually I use it for playing video games as well, but it's definitely one company that I think is in my opinion is a must have. They're also in the AI business as well. So now looking at the Simply Safe Dividend, you can see dividend safety score of 99, which is very safe. Your dividend yield is 0.84. You got your market cap of 2.4 trillion, which is a mega cap. Looking down at the key metrics, you can see payout ratio is very low, 28%. Forward payout ratio is about 25. During the recession, they maintain it, and then you got your dividend streak of 17 years without a reduction. Last 20 years, 19%, which is very fast. Last 5 years, 10%. And then you got your latest, which is 9.7. You can see I like this, how it's going up. 17 years without a reduction, and you got 13 years consecutive increases. And then you got your payout details quarterly, months of March, June, September, and December. Your annual payout will be $2.72. Ex-dividend date is August 16. And then you can see right here, although it's overvalued, I think, in my opinion, it still is a great company. Just wait for a dip though, in my opinion. And then you can start buying a little bit more, because it is a little bit in the pricier side at this time. And then you got your PE ratio of 29 versus 21 for tech. And then you got all your other stuff right here: earnings per share, free cash flow per share, sales growth, earnings per share growth, outstanding sales, total sales, return on equity. Look at this, 39% in the last 12 years, and then return on investment capital, 31% in the last 12 years. Then you got your operation managed, margin, free cash flow, and all that stuff. Now moving along to tip ranks. Based on their tip ranks, there's a 21% upside, 391, strong buy based on 24 ratings. You can see right here. Based on their forecast, they go as high as 433, average of 319, and you got your low of 232. Now moving along to my third one, which is Johnson & Johnson. The ticker symbol is JNJ. Very popular among dividend companies. This is an American corporation with lots of products, in my opinion, mostly hair care products and stuff. Now moving along to Simply Safe Dividend. Looking at the dividend safety score, they rated as 99, which is very safe. You got your dividend yield of 2.86, your market cap of 432 billion. Now looking down at the key metrics, you got your payout ratio of 44, forward payout ratio here. Recession have increased, and look at this. It just amazing, 107 years without a reduction. Dividend last 20 years 9%, last 5 years is 6%, and then your latest is 5%. And then look at that, straight going up. And then 60 years of consecutive increases and uninterrupted, guys. This is just amazing, of 107 without a reduction. Then you got your payout details quarterly in the months of March, June, September, and December. Your annual payout will be about $4.76 per share. Ex-dividend date is August 25th. And then looking down at the PE ratio, you got 13 versus the healthcare. Price range right now is in the middle. And then you got your financials right here. So earnings per share, sales growth, and then you got your outstanding sales in billion, total sales, return on investment capital, 22 for your last 12 years, and equity 17, and then 12. Now looking at tip ranks based on their price range at about a 180, 8% upside with the high of 187, your average of 180, and then 175. Rating of a moderate buy. So next on the list is Procter and Gamble. The ticker symbol is PG. This is a company that engages in consumer package. Definitely, I am definitely a big fan of Procter and Gamble as well. I think it's, in my opinion, it's everywhere. I think you probably use this company a lot too. So definitely a company that is a great dividend company, in my opinion. Looking at the dividend safety, you got 99, which is very safe. Dividend yield is 2.45. You got your market cap of 362 billion. Now let's take a look at the key metrics. Payout ratio is about 62, which is low. Forward payout ratio is 59. During the recession, there increases. And again, a solid company, guys. Look at this, 133 years without a reduction. Now looking at the dividend growth, last 20 years 8%, last 5 years 6%, and then your latest is 3%. And again, look at that solid upward trend. 133 years without a reduction, guys. This is just another amazing company. Dividend growth streak of 67 years consecutive increases. And then your payment details is quarterly in the months of February, May, August, and November. Annual payout will be $376, and then your ex-dividend date is July 20th. And then you can see right here some of the financials as well as the PE ratio. And you can see earnings payout ratio, free cash flow per share, as well as earnings growth, sales growth, outstanding sales in billions, and total sales. Taking a look at tip ranks based on their smart score, they're rated as a 10, which is outperform. Hedge funds have increased their per share to about 4.1 million, and then you can see right here that it has 5 years is about 109%. So definitely something to take a look at, guys. And then the last one is, of course, Chevron. The ticker symbol is CVX. For those of you not really familiar with it, it's a company that produces oil and natural gas. I definitely like Chevron. Definitely a company that, in my opinion, if you're looking for an oil company, definitely check this out as well. Looking at the dividend safety, they're rated as 90, which is very safe. Your dividend yield is about 3.80, and then you got your market cap at 297. Let's go look at the key metrics. You can see payout ratio is about 36, forward payout ratio is about 44. Increased their dividends during the recession, and again, another solid company, 111 years without a reduction. If you look at the dividend growth, 7% the last 20 years, 5% the last 6 years, and then your latest is 6%. And again, you can see a pattern with all the great dividend companies. They're always going up. You can see under an uninterrupted dividend streak of 111 years. You got your dividend increases of 35 years, and then you got quarterly, months of March, June, September, and December. Then your annual payout will be $6.04 per share. Ex-dividend date is August 17. And then you got your other stuffs right here, your PE ratio, and then right now it's in the middle, so definitely a little bit cheaper, but I always go buy when the dip, in my opinion. And then you got all your other financials in here. Now let's look at tip ranks based on their forecast. They rated as a high of 190 with a 19% upside. They really make it to a high of 212, and then your average of 190, and then you got a low of 165. Their rating is about moderate buy with 8/5 holds. All right, those are my 5. Again, definitely go and do your own research. Definitely check out these companies. These are great companies if you're looking for a solid quality dividend companies that will give you dividend payments. Then these are the 5 that, in my opinion, you definitely want to do your research and check it out and see if it fits in your financial portfolio or your dividend portfolio. Thank you so much for watching. Hope you like this video. Like and subscribe if you haven't done so. Stay cool, keep investing, and I'll catch you guys in the next video. Right, take care. Aloha.